Oh, hello everyone, and welcome to this webinar where we're going to be looking at the futures market, basically looking at how we can day trade it using volume price analysis and also some other instruments and what else you need to know before you even consider opening a trade on your chart. But before we get onto that, can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So very quickly, just for those of you who are coming along for the first time, I said we're going to look at some charts, and we always look at the charts through the prism of our methodology, which is volume price analysis. It's the relationship between the price action and the volume to essentially tell us what it is that we're looking at. Is it a genuine move or not? And the details of the methodology, the basic concepts of the methodology, you can find in this book up on Amazon, and there's a companion book with it as well, which has worked examples. It has 200 sort of chart examples. That's what this one is for stocks. It also has indices and it's got commodities as well, but in a way, the chart, whatever the chart is almost irrelevant. The principles are the same, and you can use it across the markets and in different time frames as well. And the nice thing about looking at examples is that the market, everything repeats in this market, not 100% identically each time, but the same sort of chart structure, a pattern, combination of volume and price action. The anomalies, you know, they happen again and again and again. And once you get to understand them and recognize them, then you know, your kind of eye is drawn to them as soon as you see them on the chart, and it kind of gives you what I call an aha moment, because what they're there for, what these anomalies are there for, they if you understand them, you can take a step back and say, that's an anomaly, that's not how it should be. But every other trader who doesn't use volume out there, who doesn't understand this relationship between price action and action, is going to be sucked in. And that's what you don't want to become. You don't want to be sucked into trades where essentially everything is stacked against you. I think I read somewhere the principle, the purpose of the market is to take your money in the shortest possible time. But if you understand what the chart is signaling, then you are in charge. You're not going to be drawn in either by a fear of missing out, or, as I said, these anomalies that appear on the charts. And we'll show you the anomalies as we look through the different instruments that we're going to do today. And volume price analysis, it's the foundation, if you like. As I said, it's volume, price action. We use candles and candle patterns. Other people use bars. Candles and candle patterns. When we first started, they were kind of just coming in. So it tells you how long we've been doing this. But they are kind of, the trading desks use them now. They've just become much more acceptable to Western traders. But they've been used in Japan for, I don't know how many years, David? 100 years, 150 years? A long time anyway. And the fifth element, and not least, probably the most important after price action and volume, and that is support and resistance. And on top of that, once you understand these elements, you can then add on your indicators, your standard indicators. We have our own proprietary ones that we have developed, and again, you can see them on the chart. Right. What I said earlier, I said, obviously, as a day trader, we all, you will look at a chart. This is where we all start, what your time frames are, whether you use minutes, seconds, you use some non-time based charts, such as we have Renko charts as well. That's fine. Those of you who may not know, we've also put together a program for our Forex traders. And part of that, in that program, we have modules which not just cover the technical analysis side, which is for VPA, but it also has modules on the fundamentals and the related markets. So it gives you what we call a 3D approach. And as what we've discovered over the years is, perhaps as day traders, the focus has been solely on the chart. Clearly, when you're trading a fast chart, of course you want to become an expert in, in what is going on in the chart. But price action, the chart doesn't move in a vacuum. There is a whole landscape behind it, which will include the releases, the daily releases, the economic releases. It will also be against the background of what is going on in the broader economy. Are we on, broadly speaking, are we on risk on, or are we risk off? There's a third element as well, and that is, there are four main capital markets. There's the forex market, the bond market, the commodities, and equities. And indices are, if you like, the futures for the equities, but they are all interrelated. They have relationships between themselves, and also there are internal relationships in the individual markets. And you have to be aware of what is going on in these other markets, particularly if you are, as I said, if you are trading the indices, because obviously you want to know what the stock market is doing. Is it going up? Is it going down? What's being affected? What is it affecting at the moment? And of course, today, if this actually comes up, I'm having a few problems with my machine lately. It seems to have slowed down enormously. Hopefully it will come up. Oh, there we are. Let's have a look at there we are. Obviously today at 3 o'clock we have Jay Powell as testifying on at Capitol Hill. I think he's before the Senate the Senate Banking Committee. It's a 2-day testimony. He started yesterday, and today is the second day. Now, whenever Powell speaks, whenever the Fed speaks, it's going to have a massive influence, can cause volatility. What he says, he can actually reverse the markets. And that's what we saw yesterday. We've got a chart for the NQ that David's going to talk you through to give you, as I said, these examples of VPA, and you can kind of see what is potentially coming along the track so that you are aware and you can be prepared. Now, the NQ has had quite a sharp sell-off for all sorts of reasons, partly because of what is going on in the bond market. The bond market yields have been rising because there is potentially inflation coming down the track. There's sort of more fear coming into the market. There's all these elements that we can combine together to actually drive the price right down on the faster timeframes. Now, all these strands, as I said, as a day trader, we all start with the chart. I do accept that, and you have to become proficient in chart reading. And once, if you have VPA, at least you can, you have that under your belt, so you will know what is coming on. But as I said, price action, there is a background narrative to that, and you have to be aware of which elements of that narrative is likely to impact the instrument that you are trading. Going back to the Nasdaq, tech has been that's very much a tech dominated index. So if you trade the NQ, you will want to find out, well, which of the companies are in there, what's driving it, what are the drivers for tech companies, for growth companies. Well, one of the big drivers has been the money, the stimulus that the Fed has pumped into the system, a lot of cheap money, and that has gone into what are called growth stocks. Recently, as I said, the market has become very fragile and has pulled back, highlighted by VPA. Again, David will highlight that for you. But the Dow, or the YM, which is the E-mini futures for the Dow, hasn't really responded in kind. The Dow is obviously made up of only 30 stocks, but the bias of the Dow is, although there are growth stocks in the Dow, if you like them, they're slightly more value based. So you have to understand, well, what do you mean by value stocks? What do you mean by growth stocks? It's all this that you have to have as part of a more general education, if you like, to supplement your technical analysis skills, as it were. And of course, there is the bond market. Now, it's quite interesting with bond yields. Bond yields are going up. When bond yields start to go up, bond prices go down. And bond yields going up, it means money is going to be much more expensive. So that gives you a number of clues. So if you are perhaps trading, I don't know, an index that's heavily weighted to the financial sector, what is the, what is the industry, what is the sector that is going to profit, if you like, from interest rates increasing inflation and potentially interest rates going up as well? Well, it's going to be the banks, because the banks only have one product, it's called debt. So if they have to raise, if the cost of money is going up, then it's going to be more expensive to borrow money. Now, what's interesting with the bond yields and the stock market is there is a point at which they could actually go up together, but there is a point at which they cross over, and in which case the stock market then starts to turn over, and bond yields potentially could carry on higher, because if you run a business, you have to borrow money, becomes more expensive, etc., etc., etc. You just have to keep an eye on what is going on in these other markets, and we look at the VIX to tell us what whether the sentiment as to what traders and investors, what are they feeling? Are they feeling complacent? Are they feeling fearful, etc., etc.? So it's all part of this much broader education that you have to develop as a day trader. And it doesn't really matter what you trade. If it's Forex, as I said, we have a program that covers all that for you. If you're trading an index, as I said, there are all these other elements that you have to become aware of. It doesn't happen overnight, it won't happen overnight, but you'll gradually become aware of these relationships. And you'll say that when you open your chart, you think, oh, right, you look at the technical picture, but you know what is going on in the background. Markets, I've got this picture to show you, and I wanted to show you because it did make me chuckle. Is this one? Where's it gone? Where's the blue? Here we are. That's it. This is from Bloomberg. Here we are. How much do central banks fear the bond toddler? Central banks at the moment, they have, their responsibility, certainly with the Fed, is they have to manage the employment, the labour market. The pandemic has devastated jobs, and lots of people have lost their jobs, and the employment rates are going higher. So their part of their remit is to support the jobs market, and you can do that if you are having to raise interest rates and the cost of money is going up. Then it's going to make expanding the economy that much more difficult. So there's all sorts of things that they try and do, and they try and manage, if you like, the cost of money, the interest rates. But they are sometimes the markets take on a life of their own, and the markets have also been very spoilt since the great financial recession, in which, through stimulus, where the central banks have printed more money, have created more bonds, and created this liquidity, and it's gone into the markets, but a lot of it has gone into supporting stock prices, and many people are saying they're overvalued. They've just gone up on fresh air, and it's just not it's unsustainable. And when things become unsustainable in the markets, it's the bond market that will react, and that's where you will find the clues. The bond market has been tamed, if you like, until very recently, but with yields going up, that is a cause for concern. And I just thought this photograph was really interesting, and it's a fantastic article. Even if you don't subscribe to Bloomberg, I'll put the link in the chat box, and you can read a few articles for free without having to subscribe. Now, what's also happening in the background is, if I mentioned commodities are moving higher. The softs going higher. They're in quite a strong trend. Oil is going higher. That points to potentially the start of a commodity super cycle. Well, what is that going to mean? It's going to mean everything is going to become more expensive. Therefore, inflation is going to be driven into the economy. And as I said, the cost of money, that drives the cost of money, blood, etc., etc. What's interesting is the things that you and I consider to be important and inflationary are not necessarily the things that the central banks can, look at to decide whether we are in an inflationary environment. So there is this dichotomy, if you like, between what they think is expensive and what we think is expensive. And certainly if you're anything like me, like us, well, food is a fairly basic necessity, and if food prices are rising and they're rising strongly, then it's going to impact us very, very badly. And if we've got a problem with employment as well. But food prices is not something that is not considered. It's not in the inflation equation that the Fed use when setting their monetary policy, because the Fed use another metric. It's called the PCE, it's the personal consumption expenses, isn't it, David? Personal consumption expenses. It's all this kind of stuff that you have to kind of pull together, as it were. And as I said, even if you are a day trade, whether you just do the indices, whether you do commodities, or nothing that is not forex specific. The book that's on Amazon is called The 3D Approach to Forex Trading, but there's plenty in there which is applicable to other markets. We're obviously waiting. We're not. We're still in the in Globex at the moment. The physical market hasn't opened, but I just wanted to draw your attention to, as I said, the daily chart of the YM, and just note we're looking at candles and candle patterns. The number of doji candles that we have here, I mean, I don't know whether you could call that possibly a hanging man candle with a ton of volume underneath it. It's not quite as developed as we have seen on the NQ, and David Scott will explain that to you. We call this sort of catenary price action, but it's interesting the number of dojis that are on at the top at the moment with the YM. The doji candle is basically indecision. It's not necessarily a reversal. We have to keep an eye on what is happening at the moment. We've got I've got some levels on here that where the index may or may not be heading. It's certainly finding support at what we call the S3 here. I have to get the, where is it? Just move that down. Hold on a second, if I can find it. I can never move this out of the way. Hold on. It's ridiculous. Oh, there it is. You can't see, there we are. Let's have a look. Yeah, I will. That's gone. That's it. Let's have a look. Here we are. Where's it good? Where's it got some support? Price 31,340. The 31,341. 31,340. We can see here it's the support line. I know the wicks have gone below that, right down to the S4, but that is pretty much the support platform that we're working off, certainly for this week, because the indicator that I'm using here to help me with support and price-based support and resistance is based on Camarilla, and this level is going to be in play for the rest of the week. And it's interesting, the third level for Camarilla, the third and the fourth levels are possibly the most important, and the whole of this week so far it's been between the R3 to the top and the S3 to the bottom. So it's in a sort of broad congestion. Now it needs to get through the S3. They've also got this volume resistance up here, because we look at support and resistance which is volume based, which comes off the volume point of control. And when you get one of these bands that comes up on the VPOC, particularly at the outer extremes of the volume point of control, it can be a point where you will get a reversal. But the person who will determine this, whether we get a reversal today or a continuation of, it is a bullish trend, although we are in a congestion at the moment with a lot of indecision, is actually going to be Jay Powell. He's, his commitment is to obviously part of his remit to the employment market, to managing interest rates, etc. But he's also now got the bond market on his back, because if yields keep rising, and we've got, as I said, commodities going higher as well. But for today, it's certainly poised. We know what our levels are. It's been pushing higher, but it is capped at the moment at this top level, which is 31,570. So, you know, we're just going to have to wait, see what happens at the open, and also more importantly, see what Jay Powell says. So just to recap, by all means, you know, got your technical analysis, you've got your VPA, you've got your indicators, but you do have to broaden your knowledge out to the you know, to the other sections of the market, which will also impact what you are seeing on the chart.
Hi everybody, hopefully you can hear me. Hopefully you can see my screen. Just turn around. Yep, brilliant. Anna can hear me and I can see my screens, that's great. I just wanted to start with currency futures. This is on NinjaTrader. I've also got them on TradeStation as well. This is the 6A, the 6B, which is cable. This is 6C, which is CAD dollar. This is euro dollar. This is yen dollar, and this is New Zealand dollar, because the dollar is always the counter currency. And the reason I just wanted to pull that up was if I pull over the trading view and the dollar index, had a really strong move in the dollar since this is 1 o'clock. So this is, for us, this is the open of really the US markets getting underway at 1 o'clock our time. And it's something you see continuously. You'll see it when we go to the London trading session when London opened up at 8 o'clock. And the same is true of the US session when it opens at 1 o'clock. You will often see these very strong moves, and we're seeing it now for, as I say, for the dollar index there. So I just wanted to highlight that to start with, just to kind of paint the picture, if you will. And we're seeing that obviously reflected in terms of the majors. And the nice thing with the currency futures is because the dollar is always, and you can see it over here, this is on 15-minute CSI. There we go. This is the dollar, the red line, rising very strongly. And you can see how strong it is because this is the Aussie dollar selling off sharply. This is the pound selling off sharply. This is CAD dollar, remember. So this is the Canadian dollar selling off, being bought with the buying of the dollar. This is selling on euro dollar, selling on yen dollar, and also on the New Zealand dollar. So it just gives you a really good snapshot of the impact of the dollar really across the futures market, particularly in terms of currency futures. Really nice volume here. You can see we've got this nice price waterfall breaking away from the volume point of control here. Decent resistance in overhead there. That was support. It's now resistance, obviously. As I explained in the webinar this morning, when you get down to these low volume regions here on the volume point of control, you expect the market to move through there pretty rapidly. You can see in this case it's associated with rising volume. So we've got the classic example here of rising volume, nice price waterfall developing. The trend monitor here, I'm just keeping an eye on what's going on. The dollar is still riding sharply. It's now going up 90, spot 26, 27, is rising strongly. And that's why you're seeing this move develop really across the complex. In other words, the entire complex is now buying the dollar for whatever reason. I don't really care why they're buying it. I just need to know they are. And that's what's going on, and it's supported by the volume profile, which is just this really nice rising volume, falling market. As I explained this morning, rising volume under a rising market is intuitive. It's effort and result. You expect it to take effort to get things to rise because we're all used to the concept of gravity. So to get something into the air takes effort. That is certainly true in terms of price action, but it also applies equally to a move to the downside, because a move to the downside will not develop fast. It won't develop this price waterfall unless you've got strong volume driving it. In other words, heavy selling pressure. There's got to be heavy selling in there. If the volume is falling, not going very far, it's as simple as that. Absolutely dead simple. It really is. And it's just such a confirmation of the strength of that particular move. And then, of course, at the other end of the spectrum, what you're now looking for, if you're looking for this as a reversal, you're looking for the buyers to step in and maybe reverse that particular trend. But for the time being, that's what we're seeing. This is what's going on. Just pull it over again so you can see it on the dollar index here. There we go. That's what's going on. That's on. This is on 5 minutes. So I could take this down to 2 minutes, take it down to a faster one. There we go. You've got volatility. I've got the volatility trigger on here as well. So you're getting a little volatility as well. So it's very volatile. The trend monitor down here you can see is supporting the move higher. You know, it hasn't come to an end yet. Still carrying on. Really nice. And obviously, what you would do, you should have this on different time frames. I can do it very quickly on here. It's just TradingView is a fantastic platform. It obviously covers both the markets as well, so it's really, really powerful, and you can move through it pretty quickly. Obviously, the ideal is having it in multiple time frames, which you can do up here, but I won't change this just for now, so you can see what's going on. But that's the move in the dollar, really strong buying. But you've got to remember, this is ahead of Powell speaking at what, 3 o'clock our time, so it's just sort of an hour and 3/4. And it's inevitable you will get volatility, and there is also the potential for quite a strong reversal as well in whatever has been the precursor to that, because it just goes hand in hand. Whenever you get these big news releases, what you're looking for is why is the market reacting like this? Does it know anything? Does it have an insight into what Mr. Powell is going to say? The answer is probably not, and therefore why is it doing this? And your conclusion from that is, well, in that case, I'm looking for the possibility of reversal. You will see this in a microcosm way in if you watch a non-farm payroll, for example, and I'm talking about minute time frame probably, or less than minutes, in seconds maybe, you'll see the market react very strongly ahead of any release like that, in a minute, before it, half a minute, whatever, 2 minutes, 3 minutes maybe. And almost inevitably, it will go in one direction, which is the opposite to the direction the market actually delivers thereafter. And you have to ask yourself why. And it's because that is the time at which the market makers are making money. It's as simple as that. It's absolutely as simple as that. That's where we are now. This is the strong buying. This is the strong selling of the pound we've seen. So we've got a nice, you know, in terms of cable, pretty strong trend there, because you've obviously got heavy selling in the pound. You've got now heavy buying in the dollar. Let's just move this out of the way if I can grab it. Can't move it. There we go. Let's move it out of the way. Let's pop that up over there. There we are. So that's out of the way. So that's where we are at the moment. Now, what are we seeing in terms of the move lower? And the other beauty of doing it in this way, particularly across a complex where you're dealing with essentially instruments that are interrelated themselves within their own market, which of course these currency futures are. What this also gives you is a different insight into, for example, down here on the 5 minute euro dollar, I can see we've got a volatility trigger. Now, there's no great surprise because we had a big widespread candle, but we've got a ton of volume underneath. This is way outside the average true range. What we're expecting thereafter is a bounce, either a bounce in terms of congestion, or we're expecting a full-blown reversal. But at the very least, we're expecting a pause point. Now, if I'm in this position and I get one of these volatility triggers, I'm in this price waterfall, I've made a load of money in here, I'm out. I'll close out 99% of the time because I don't want to sit through a congestion, or worse still, a reversal. So I'll quite happily take my profit off the table. And the beauty with this indicator is it was actually triggering in real time. I wasn't watching it at the time, we were watching the dollar. But had I seen this come in, I would have taken the position out of the market, closed out, because now I'm just going to wait and see what's going to happen next. Are we going to see congestion, or are we going to see a full-blown reversal develop thereafter? But more importantly, what that signal is giving you, if you were trading one of these other pairs up here, which have actually not delivered a volatility trigger, what it's giving you is a very different view, a perspective on what potentially may be happening in these related markets up at the top here as well. So it just gives you a different perspective. So it's not always about multiple time frames. It's also about looking at what is going on in related markets, both inter-market and also cross-market relationships, which is so important. Let's just go and see what's happening in terms of the other markets. Let's take a look at the indices and see what sentiment is like here. And obviously there is going to be a certain amount of volatility. It's going to be pausing ahead of what he's like to say and all the rest of it. But if I flick up the NQ, just pull that out, make it a bit easier. There we go. This is yesterday's price action. The wick goes from here right the way down to here. You may not be able to see it, but I can assure you it does. It goes below the volume point of control, just below 12,800. But look at the ton of volume that came in yesterday. Absolutely huge amount of volume. The market, this is a massive shakeout. The opportunity for the big operators and market makers to make a ton of money on Powell's news. crash the market, everyone in panic mode, go in to buy and reverse it back up again. It's just a classic trap maneuver in terms of accumulation, in terms of accumulating stock, whatever it may be, to frighten the market to death, and then just walk in with the carrier bags and wait for everyone to dump, and then just go in and buy. It's very simple. The explanation of what we'd like to see thereafter, of course, is given this huge amount of buying, is now what we're looking for is probably some further congestion, then ultimately reversal back up, probably back up to this level once more. And that's what we're looking for. And that's why the daily charts are so important, because they give you that perspective. Exactly the same principle on the ES, which is S&P 500. Market plunged, recovered. It closed pretty much at par on the ES. Ton of volume underneath, lots of buying in there. There has to be, because if this was selling, if this volume here were all selling volume, then this candle would have closed on the low of the day. It hasn't. It's closed pretty much at the open of the day. So what does that tell you? Very simple. This is buying. The predominance of volume in here is buying volume. Yes, there's people selling in there. Of course, there is heavy selling in there, but the big operators and the market makers in stock markets will have walked in and bought heavily and driven the price action back up. So if they are buying, what does that tell you about what's going to happen in the next few days? Market's going to recover from that particular reversal. The difference, as Anna said, is on the YM. The YM is not typical. It hasn't followed suit. We see this a lot, this divergence between, we've seen the same price action, but it's a much higher level. And the reason that the markets have been so fragile is this catenary price action here. It's as simple as that. It's like half of an arched bridge, if you will. So this is one half, and if you imagine the other half coming down here to match it, my cursor's gone off the screen, apologies, but basically it would look something like that. It's like an archway. But that's the sort of price action, and what you're looking for in association with that is also falling volume, because generally speaking, what you've got through here is falling volume in a rising markets, and more importantly, what you're seeing, the reason you're seeing this arching effect is because you're seeing narrowing spreads coming in, narrowing price action, so you're getting this effect. If the market's going up rapidly, then it's going to go up like this on wide spreads and march its way up, and it's going to be on a diagonal of 45 degrees or 40 degrees, whatever. But as the spreads narrow, then the curve actually flattens and it goes into this arcing, what we call catenary shape, particularly if it's supported by falling volume, which you've got here. Now we've actually got buying coming in here. The market's crashed, we've bought, crashed, we've bought. So the market is being supported at this level. Depending on what happens with the NQ and the ES will then dictate what goes on in terms of the YM. Now, obviously, the YM is a very different animal to both of those in terms of the constituent elements, but nevertheless, that's what we're seeing at the moment. We are seeing support of the market and the potential for a rally higher, which in terms of risk sentiment and in terms of the currency markets and related markets, in terms of commodities, in terms of commodity currency pairs, in terms of bonds and all the rest of it, that's what we're looking at. We're looking at a potential for a recovery once more from that shakeout day, which occurred yesterday. Another very simple example of really a price waterfall developing. You can see the rise in volume here. It's classic. We've got a nice widespread down candle on high volume. The difference here is if you were entering this particular position as a trade, you'll be looking at it and thinking, well, how far is this likely to go before it hits trouble? Well, it's pretty obvious. It's going to stop here at the VPOT. Why? Because that is the heaviest concentration of volume. You've also got a support platform of the accumulation distribution indicator. This is based on price. This blue dashed line here is very thick. You may not be able to see it here, but there's a little number 9 alongside it, which tells me that it's been tested and supported 9 times in the past. And that's the reason it's so thick, because what the indicator does, it actually presents these in terms of a pictorial representation of strength and weakness. You can see down here these thin lines, these light dashed lines. They've only been tested once, twice, once, twice, once. These are less important. This is very important. This is extremely important, but it gives you that visual picture instantly. But that's from a price perspective. What the volume point of control does from a volume perspective, it presents this volume histogram, which works in the same way, even more so at the VPOT. Once the price action gets the VPOT, I can guarantee that it will go into a congestion phase because you have so much volume there. sitting there in terms of old orders, new orders waiting to be executed. There's a huge amount of volume there in terms of order, transactional volume. And therefore, what you expect to see is exactly what is going on now. So if you were jumping into this on the expectation of it slicing through here, I'm afraid you're going to be sadly mistaken, because it's just going to consolidate at this region. Now, obviously, you'd be looking at this in different time frames. We're just looking at one here, but that's what's happening. And more importantly, and again, going back to this whole business of related markets, interrelated markets, what we're looking at here is the YM, the NQ, and the ES. What have you got in all three? Well, you've got the volume point of control, volume point of control, volume point of control. So if you were trading this short, there's 26 different messages there to tell you that this isn't going to, it may well develop longer term, but in the short term, it's a question of just got to be patient and wait for the congestion to die away or break away from the volume point of control. Any break away from the volume point of control has got to be associated with good volume, which will confirm the move away. So that's where we are in terms of the indices right now. Let's just have a quick look on some of the other commodities. As Anna said, this is, there's a super cycle coming in terms of commodities. We've already seen it in oil. We write about oil, we trade oil, we write about it regularly. It's been very bullish ever since we came off the plunge lower and, created this great trend, which has been consistent, moving up through the various regions. We said it was going to get to around $60, $62 a barrel and going to congest there, which is exactly what it's doing for the time being. Now, obviously, we're waiting for the move to develop to the upside, but for the time being, that's where we're sitting. But it's been a very bullish trend. The same is also true if you look at softs. Let's have a quick look at the soft commodities. There we go. This is on the ZS, the ZC, and ZW. So basically, it's soybean, corn, and wheat. On the top line is the 5-minute, but on the bottom is the daily charts. You just pop any of these open. We've had this big bullish cycle, which has been going on for some time now. Pull it right back. There we go. It really has been an extensive cycle. Now we're sitting around the volume point of control, where it's been since really the start of the year. But if that breaks out higher and goes on, then we're going to see further rises in all of these three. Just pop that up, exactly the same, pretty much identical, just haven't got the volume point of control up at that sort of level, but in terms of the shape of the chart, much the same. And on up to wheat, there we go. So it's very, very bullish across the commodities, and really that means only one thing, it's inflation. Now the big beneficiary of inflation is going to be gold at some point. It isn't at the moment. This is gold. This is on the GC. This is 04 contract. This is a big contract. So there is a micro contract. There's an MGC, which is 1/10 the size. But what you will find is you will not see the smooth price action you get with this contract, because this is heavily traded, whereas the MGC micro contract is not. And that's true of any micro contract in the futures world. You'll find the price action will be less smooth, quite spiky. You'll get little pause points. The price will go somewhere like that, and then it'll pause, won't do anything, and then maybe it'll jump down and go there and then over there. So you don't get this sort of smooth price action, which allows you to read price and volume smoothly. Other than that, works in exactly the same way. This is the 5-minute. Big move lower, lots of volume, volatility trigger. What are you expecting? Well, you're expecting one of two things, either reversal or congestion, and that's what's developing right now, and that's why it's such a powerful indicator. If it comes in real time, as I say, it triggers in real time. You don't have to wait for the bar to close, in other words. Now, if you're on a fast time frame, if you're on a 15-second or 30-second, well, it wouldn't matter too much. But if you're on an hourly chart or a 15-minute chart, it does matter, because as soon as you see it, it gives you that warning to get out. If you've got profit in the bank, then take it and get out and bank it, and just wait for the market to pause and just what is going to develop. Here we've got a rally in the market. We've got a rally on falling volume, lots of volume coming into this one. This has gone wider on half the volume. Nevertheless, the volume's falling away. Is this going to rally higher? Well, we've got a low volume node. If it's going to get through there, it's not going to take much of an effort. But the overall sentiment at the moment is bearish in terms of the faster time frames. This is on 15-second. Let's go a little bit slower than that. Let's go up to 1 minute. Again, we've got a volatility trigger on 1 minute. Ton of volume coming in under there, which is what we expect to see. It means the big operators are in here. Expect a reversal. We've got the volume point of control here. We're going to see congestion for sure. nice price waterfall, volume rising, and then bang into the volatility trap at the bottom of it. And it's time to get out and say goodbye and bank your profit. Same on 3 minute, exactly the same here. Big volatility trigger, ton and a half of volume, tells you the big operators are in there. They're going to be trapping you. They're going to be reversing it. They're going to be reversing or congesting, one or the other. Wait for it to clear. If you want to jump back in, that's fine. It's still bearish, obviously. Wait until it clears the bottom of that candle, a decent way, and then you can jump back in. Again, classic example of VPA, falling volume, rising market. It's not going to go far because the volume is falling away. That's what I said earlier on. And you've got the trend monitor there. Trend monitor is pretty much blood red throughout. Little bit of a pause point on 1, but really coming out on the other side again. Hasn't really flickered on 3. No change on 5. Wouldn't expect it anyway. And the same on 10. So it's it's telling you it's remaining bearish for the time being. And obviously part of that move will be driven by what is going on in terms of the dollar. Because if the dollar is falling, if the dollar is rising strongly, then you expect generally that to react inversely to commodity prices. Let's pull that. It's actually paused a little bit now. We had that very strong rally. It's come off a little bit. Bear in mind, this is on 1. Sorry, just drop that out of the way. There we go. So that's where we are in terms of the dollar at the moment. It's come off a little bit. Let's just pop that back up again, the time and sales, wherever that, there we go. So I've got the time of sales on here, also the time of sales up as well, because it gives me a heads up in terms of what's going through in terms of volume numbers down here. This is real volume contracts. So this is not spoofed. This is not on a ladder. This is actually executed futures which are going through the market right now. I'm not interested in the 1s and 2s going through here. There's hundreds of them. The ones I am interested in are anything over 20 or 30 at the big blocks. In other words, if I see a big block go through here, I want to see how the market reacts to it. Is it positive for the market? Is it negative for the market? Is the market not reacted? If the market's bullish and you get a big block go through and it's just not reacting, it's just giving you those signals of how is the market reacting to the flow of volume that is moving through it. As I say, these 1s and 2s are really of no consequence whatsoever. They're what you expect to see. It's the big blocks that you're really looking out for. We do a lot more on time sales, but I always have that up there as well. Just gives me a heads up. Just go back onto the indices, just see where we're going. Let's go on to multiple time frames. What have we got? I've got the YM here. Probably not a great deal at the moment. It's all very much, it's pretty much sideways. Going to be waiting for power and all the rest of it. And when the markets are quiet in this way, then if you're going to trade them, you have to move up to the faster time frames. As I've said many times before, move up to 15-second or what. And again, another classic. These are the sorts of signals you're looking for. You're looking for anomalies. This is anomalous. Why is it anomalous? Because you've got an absolute heap of volume come in here, and the price action's gone nowhere. It's anomalous. What is that telling you? It's telling you there's a huge amount of effort gone into that particular candle, and it hasn't gone anywhere. And the analogy I always use is one of driving a car up an icy mountain road. The road's getting steeper and steeper, and you're applying more and more pressure to the gas, to the accelerator, and gradually over time, you'll get to a point where you're just applying more and more, the wheels are spinning and you're not actually moving forward at all. So you start to slow down until you come to a stop, your wheels are spinning fast. In other words, you're putting in a lot of effort, but you're not actually moving anywhere. And it's exactly the same principle here. 1.5 tons of volume gone into that candle, hasn't gone anywhere. So, what does that tell you? It's anomalous. There must be an awful lot of selling in there, because if there weren't, this candle would be very tall up the top of the chart here, up the top of my screen somewhere, and it's not. So it's anomalous. It's just giving you all that visual picture on what is like to happen next. Is this going to, carry on that high? No. It's going to move sideways at the least and certainly come off. Now we've come back down to the volume point of control again. We've got some very strong resistance over here, which we've now breached with that candle. Have we got any support below? No, very little. So we're going to be trading around here for a while. If it breaks the downside, we've got a low volume node here, so we'd expect it to move through there pretty quickly. Then we're going to run down onto this level, which is going to maybe provide some support. Then we've got another low volume area here, which it would go through fairly quickly, down to another area here where we would expect it to pause. Plus we've got some price-based support coming into play there. We've got two little levels there, a cluster of 2 there to offer price-based support as well. And really that's what you're looking for the whole time. Let me just pass back to Anna for a moment. Hold on.
Oh, hi. Thanks for coming back. David has moved you back over to me. Right. I had my NinjaTrader platform open earlier, and I've now got, this is MT4. One of the questions we often get asked about futures is, obviously, if you want to trade the futures contract per se, you do have to have you have to have a certain amount of money to open the account. Although I do accept the CME have now got e-minis, and they've got micro contracts as well. So because they do want to, which are actually very, very popular. But a lot of forex brokers, in fact, all forex brokers, will give you the opportunity to access these markets. It won't be the future contract per se. It will be what's called a synthetic version, but the values will the price will be the same. Sometimes it's very slightly off, and you will certainly see the candle patterns. You'll see the volume, and you'll be able to make your analysis based on what you see. And in fact, what I've pulled up is the equivalent of the US 30, which is the YM. This is the for the Dow, basically. And we can see here we have very, very similar price action pattern chart structure that we saw on the actual futures chart, as it were. And with MT4, you don't have a lot of time frames with MT4. With MT5, you have a wider selection, and certainly with Trading View, you can trade these on Trading View as well. You will have a better selection. But Trading View is it's not a brokerage, it's a platform, David, isn't it? But if you wanted, what I'm trying to say is, if you wanted to try this for free, completely free, all you have to do is open a demo account with a reputable MT4/MT5 broker, and you will get the, as I said, you will get access to these instruments. And what I have here, I have the daily, I have the hourly chart with those all important key levels. As I said, the S3 has been bumping up against the R3 that we saw on the on the future chart. I have the 15-minute chart. And the thing about the Camarilla levels, you may notice that the levels are different. Where these lines appear on the chart, they appear at different places, and that's because the indicator it calculates the support and resistance levels for Camarilla every 24 hours for all charts up to, but not including the hourly chart. On the hourly chart, these are going to be here every week. Now, the importance of having them both up together is, with support and resistance, is when you get a confluence. So if you get an important level, when price comes up to an important level, say on a slower time frame, and this is what David was saying earlier, that slower time frames carry more weight in terms of support and resistance, and on a faster chart, you are approaching that level, you get this, what we call this confluence, then you have to be aware of it, because something is, is either going to pause or it's going to, and certainly if it's going to go through, whichever way, up or down, it's going to need a lot more volume. It's going to need a lot more fuel. The nice thing about, this is our Renko chart that we have developed. This is the indicator that we've developed for the Renko charts on MT4 are offline charts, so you have to create it, but you can add the indicators on in exactly the same way. And what Renko does, it gives you an uncluttered, clean look at price action. There are no wicks to the candles. You will see clearly, in a very geometric way, the trend, the congestion phases, the break from trend, the points at which the price action stalls, you get patterns. So you could say that's a double top basically. Now it hasn't actually hit a level. I'm talking about levels here. You say, well, why has that developed a double top? Well, we would then look at the equivalent time-based chart, and we can clearly see, as I said earlier, it's hit that double top because it hit a volume resistance. So price-based resistance, volume-based resistance. We've got a double top. We're right back to the volume point of control. We've still got another 45 minutes before the physical open. What are we waiting for here? We're waiting for potentially a break from the volume point of control. And by looking at the histogram that is produced by the volume point of control, what we see here, this is like a bell curve, if you like, where you have these narrow areas here. These are called low volume nodes. And one of the things about volume, looking at volume and price over time, is that when the price reaches such an area, it is going to go through fairly quickly because there's nothing in the way to hold it up, as it were. Whereas when it reaches one of these little bulges, if you like, then our expectation is that it's going to act like a cushion. So if it's going to get through there fairly quickly. Now, when price starts to move very quickly and gathers momentum, obviously it can trigger volatility, and then we've got the volatility trigger that you see here was triggered on this candle here. So volatility, when things start to move fast in the markets, it's when traders start to develop what's called the fear of missing out, and they jump in, and that can cause all sorts of problems. So we're just waiting for that to come down. So that's why we had that double top there. In terms of how you use this in conjunction with the time charts, basically the trend dot that you see here and the red bricks, and we have the trend monitor down here. What we're looking for is a match of the dot and the monitor. And when you look at the time chart as well, you look at the levels that are being approached on the time chart and the volume that's going in, you say, right, okay, then potentially that's going to give me a trade to the downside. But that price action is happening within the context of what's going on with the levels, as I said, on the slower time frames. And what I also have down here is talking about the related markets. This is actually the Aussie yen. What's happening on the Aussie yen as represented by these lines. This is the Aussie and this is the yen. Now, one of the things you need to be aware of is there are currencies that are proxies for risk. So if the market is in a risk off, it's in risk off, that's what I was trying to say. Certain currencies will be bought. One of them is the yen, one of them is the Swiss franc, the dollar too. Maybe they're safe havens because nobody wants to take risk and the market is nervous, it's worried. The Aussie is a risk currency in the sense that it's also representing commodities. Australia is a huge commodity producing country, and as I said, commodities have been going out. The Australian dollar is absolutely on a tear at the moment. So the Aussie yen, when put together, is a proxy, and all this line tells me is when there is selling of the Japanese yen, markets will be moving higher. When the Aussie is moving higher and the yen is moving lower, markets will be positive and they'll be taking on more risk. When we have a dramatic reversal, when the yen is starting to be bought, then the sentiment may be changing. Now, you may say, well, that's not actually what I'm seeing at the moment. These they don't work in lockstep, but we have to be aware here that this hasn't quite, this is overextended, and once this starts to turn up, that will actually confirm what we're seeing here in real time on the actual chart for for the Dow basically. And also we're coming to a support point here on the R1. So we know where this price is likely to be heading. The R1's not as significant. It's another potential pause point where it's aiming for that. What we do is we go back to look at the Renko chart and see whether that is carrying on higher. This version of the Renko does produce these little wicks to the bottom of these little bricks. When you get the wicks to the bottom, that's actually telling you there is price support coming in. We know that the yen is still falling, so it's just putting all these bits of information together. And as the only thing that has really stopped the YM, the Dow going higher, is this resistance, is this big resistance that we see on the S3. You can go back and you can look at the times that this area has actually been a point where it has reversed from. So the chances are it will, if you like, probability-wise, it is probably going to, may not reverse entirely, but will certainly pause and maybe congest, or as we can see here, looks to be moving lower. But what the Renko is telling us is that there is support coming in, and we just have to look at what is happening now. I'm going to see if we're going to get a volatility candle, because if you've got a volatility candle, there it is, exactly, that's triggered. Because this triggers in real time. That went through this low volume node very, very quickly, as we saw here. Now what happens is, once that's triggered, it's reached this sort of thicker area of volume support. Now what happens with volatility is this happens, and a lot of traders say, oh great, I want to jump in the move. And yes, it may indeed carry on lower, but what tends to happen, it will go back into the spread of that candle and actually reverse back up. We just have to wait and see. You just have to be aware of what you're looking at from the perspective of VPA, looking at the levels. Where is the price going to go? It was a break from the volume point of control on the time chart. We saw this move, if you like, from all the way back from the double top that we saw on the time chart. This is still red. This is what the Renko does, is when you're in, it does actually help to keep you in. It's now hit a price-based support. It's slightly gone through the S1 here. It's a little bit volatile. We'll just have to wait and see what happens. Right, I think there's any question. Let's have a look. No, the contract has got nothing to do with the number of contracts or their value. Is there any scale? No. If I set a Renko, will it be valid for so? No. If you set a Renko, the Renko chart, if you set a value yourself to 3 points, 5 points, whatever it is, it will stay there until you change that. If you use the ATR function, that is an option in our Renko indicator, then the ATR function will it will work itself out. Sometimes you do have to you do have to refresh it yourself, and I don't have a link to the MC4 display local time. It's something you can find for yourself on Google, but as I said, I can't vouch for the software or whoever has done it. It's something that we may be looking to do ourselves. You just have to take 2 hours off, and that's it.
Thanks, darling. Just to pick up on the Renko theme, I've just literally put this up. The dollar's rising very strongly. You can see the yen is being bought very strongly, so no great surprise to see what's happening in terms of equities. This is the NQ. This is on 15-second, the equivalent Renko at the top. This is on 30-second, equivalent Renko at the top. And I've got it on 1 minute equivalent Renko at the top. It's just a brilliant, brilliant way of combining a time-based chart with a non-time-based chart above in multiple time frames. So this is basically running on a 15-second equivalent, and it's telling me at the moment that we're running at 20. We're on NQ, so there's 4 ticks per point, so it's basically 5 points, if you will. Same here, we're on 27 here, 27 ticks, and over here we're on 37 ticks, and we get this fantastic price action really wonderful with the trend dots. You've got the trend monitor here. The trend dots have started to transition here. You can see they've changed to blue. They've gone from the top, pressing down to the underside, now lifting to the bottom. Same here. You've got the same over here. They've changed color. We haven't actually seen them transition in the trend monitor as of yet. No change here, no change here. Just starting to transition maybe here. And we're starting to see a transition on the time-based chart. But in addition to that, of course, you can use the VPA methodology to look at the what's going on in terms of buying. Got some buying coming in under here. No surprise, we've seen some reversals going on. Volume's not great. It's kind of falling away. You know, is it going to go very far? Just keep a look on the dollar. Dollar's come off a bit, so you know, expecting a bit of a bounce, which is what we're seeing. But very strong buying on the yen. This is on 3 minute, I think. Yeah, it's on 3 minutes. So we've got strong yen buying on 3 minute. And that's why we're seeing that particular move there. Very, very smooth. And that's the beauty of Renko. And the beauty of the NinjaTrader Renko is that you can set it to any time frame. If I reset this, this is on 15-second at the moment. Remember, it's on 20. Let's see what it comes up with now. It will change slightly. Now we've gone to 29, 28, 28, 29. Just let that settle. There we go. Back in with another phase of price action. You just reset it all the time, and you set it every 5-10 minutes, something like that. Of course, at the faster end of the market, when the market is really moving quickly, and that's the beauty of a non-time-based chart like a Renko, it will reveal momentum. A time-based chart does not reveal momentum. A non-time-based chart like a Renko or a tick will, because they're not dependent on time. These bricks will form according to the time it takes for 29 ticks to have been formed in the price action, and then the brick will form. It's completely independent of time. So the faster that particular action occurs, then the more speedily the bricks will be built, and you'll see literally they'll come out like a Gatling gun. It's extraordinary. When the market is really fast moving, they build very, very quickly and develop these very strong trends. But you can then apply VPA to the underside using the time-based approach as well. It's very, very powerful. It's one we use a lot for scalping, obviously. Across all the markets, you can see the yen is rising very strongly as well, just telling you what's going on. Dollar's rising as well. Come off a little bit in the last couple of minutes, but it's still pretty strong and rising. And obviously all that's going to change and pause as we get through to Powell in about an hour or so. So there we go. We're at the top of the hour now. So we've done just a little bit, gone over time a little bit, so apologies for that. Just to highlight all the bits and pieces, there we are. Let's go to the indicators. You can find all the indicators here. The license for NinjaTrader 7.8, it covers both. So if you're trading NT7 or NT8, it's up to you. You flip-flop between whichever you prefer. We just give you a different download because they are coded differently. We've got MT45, as Anna said. That's again, same principle. You can run either platform with the single license, so you choose. We don't mind which it is, and you do that through your own user dashboard. Trading View. As I said this morning, we're developing those indicators. They'll all be available, so that will be a full package, which will be equivalent to the MT45 in terms of price. So it will go up in price. So if you have the Trading View full package, or you purchase it now in the next couple of months, once we release those, the price will go up, but you will get them free of charge if you're already a subscribed customer on the full package. And TradeStation, we've got two versions of TradeStation. We've got TradeStation Global, which is the version that uses Interactive Brokers as the feed, which is on 9.5, and then we've got TradeStation Securities, which is driven through the TradeStation feed itself. Immensely powerful, and you've got radar screen on there. Wonderful platform, terrifically powerful with the radar screen as well. And that's all been launched, and that is all up and available, and I have to say, going down really well. If you want to keep up with Anna, you'll find it all over at annacooling.com. All the books are up on Amazon. You can buy them in Kindle version or in paperback, and all the links to the various sites there as well, and the various packages. Finally, that's the education program at quantumtradingeducation.com. It is called the Complete Forex Trading Program, and it doesn't just cover spot markets. Obviously, it covers futures as well. And in addition to that, we've bolted on the funded program here so that our students, and this is students only, so that students can leverage that knowledge and trade our money up to $2 million with no risk to you. It's as simple as that. You start with an evaluation count. We give you 5, 10, or 15,000 to get you going. You choose which size you want to start with. And then once you've hit a target that we set, which is very achievable and proves to us that you're consistent, and you've proved to yourself that you're consistent, then we multiply it by 4 to get you up to the next level. So if you started with 10,000, we give you 40,000 as your next level. You earn a profit on that. You get 50% of your profits kicked back to you as a thank you. That's paid out monthly. And then we double the account thereafter. So on 40,000, it goes to 80, 122, 240, 480, and right the way up to 1 million or $2 million. So there we are. That's it. That's where to find all the bits and pieces. Thank you very much for coming along today. We do appreciate it. Hope you've enjoyed today, and we will see you again soon. Enjoy the rest of the trading session, and we will see you again next week. So thanks very much indeed. Stay safe. Hope you're staying well, and bye for now.